Hello friends. If you are new to trading, indicators might look confusing to you. There are lots of lines, bands, or bars usually. But you have to start from somewhere in order to be a profitable trader. Today I will show you an easy indicator, and some trading strategies that you can use with it. The indicator we will see today is called Williams Alligator Indicator. I hope after the video you will be more comfortable trading with this indicator. But before we start, please be sure you subscribe to the channel and like the video. Before we dive into the trading strategies, let me show you the Williams Alligator Indicator. The indicator was created by the legendary trader Bill Williams. Bill Williams noticed that markets move sideways 75% of the time, and they move within a trend just 25% of the time. He believed that a huge part of the profits are made when there is a trend, so he created this trend-following indicator, which is called Williams Alligator. I believe this briefing is enough for now. Let's open our charts and dive into some examples. I will open the TradingView.com and add Williams Alligator Indicator from the top menu. People comment me a lot about the TradingView platform. So let me answer before you ask. Yes, it is free, and it is really useful, but you can use any other charting software if you want. As you can see, Williams Alligator has three colorful lines. These lines are smooth moving averages. Each of the lines has its own name. The green line is called the lips. And it is the 5-period simple moving average smoothed by 3 bars. The second pink line is called the teeth, which is the 8-period SMA smoothed by 5 bars on a subsequent value. And last, we have the blue line, which is called the jaw, and it is the 13-period moving average smoothed by 8 bars. So if you are a new trader, you can really benefit from the Williams Alligator Indicator. Because it shows when the markets are trending, and when they move sideways. If the lines are apart from each other and if they are in a row in the correct order, it means that the market is in a trend. If the lines are close to each other and crossing a lot, it means that the market moves sideways. Williams Alligator is a trend-following indicator. And we will use it to hop on trends. So we will avoid opening positions when markets move sideways. Remember that, to be a profitable trader, you have to trade in the same direction as the trend. The most important line of this indicator is the lips, which is the green line. Because it is the moving average that will give us the entry signals. In the traditional Williams Alligator trading strategy, it is a buy signal when the green line moves over the other two, because it indicates an upwards trend. And it is a sell signal when the green line moves below the other two lines, because it indicates that a downwards trend might be starting. It is called the Williams Alligator Indicator because these lines look like an alligator opening its mouth when the indicator gives an entry signal. If you look closely at the lines, you can see an alligator with its jaw, teeth, and lips. Same way, if the markets move sideways, the mouth of the alligator is closed. I am telling you the traditional Williams Alligator strategy first, so you understand the indicator better, but we will not use this strategy while trading, because it is not profitable at all. We will modify this strategy, so we can have better profits. I tested many ways of using the Williams Alligator strategy over many years of trading. And in this video, I will show you strategies you can use this indicator and still be profitable. Now, before I dive into strategies, let's summarize what we know about this indicator. The alligator indicator shows us 3 things about the market. First, it shows us the direction of the trend. If the slopes of the 3 lines are positive, it means that there is a positive trend. Second, it shows us the absence of a trend. If 3 lines are close to each other, and if they cross each other a lot, it means that there isn't a trend in the markets, and the market is not volatile. And last, it shows us the formation of the trend. If the lines are far apart from each other, and if the green line moves above, or below the other 2 lines quickly, it indicates a trend might be starting. Okay, I think we are ready for our first trading strategy. In this strategy, we will combine the Williams Alligator Indicator with the ADX indicator. We will increase our win rate thanks to the Average Directional Index indicator. ADX is also a trend indicator, and we will use it for the entry signals. ADX indicator shows us the strength of the trend. The higher is the ADX value, the stronger is the trend. If the ADX value is low, it means that the market is consolidating. So, ADX indicator shows if the stock, commodity, or currency is trending or not. We will put a horizontal line on the ADX chart, and the line will be at 25. It indicates a strong trend, if the ADX value is higher than 25. So in today's strategy, we will open positions when the ADX value crosses above the 25 value. In this strategy ADX value will give us the entry signals, and we will use the Williams Alligator for confirmation. If it sounded complicated, don't worry. I will give you a cheat sheet with the rules to follow. Our first rule is the same for both the long setups and the short setups. We will enter the trade when the ADX value crosses above the 25 level. So the ADX indicator will give us the entry signals as I told you. Our second rule is about the alligator indicator. We would take a long position only if the price is above the 3 moving averages. And similarly, we will take a short position only if the price is below the lines. Our third rule is the same for both long and short setups. Moving average lines should be far from each other. Because in markets where there is a strong trend, the jaw, teeth and lips are apart from each other. So if the market satisfies these 3 rules, we will open a position at the closing of the candle where the ADX value crosses over 25 level. We will use the jaw, which is the blue line, as our stop loss. In long positions, our stop loss will be just below the blue line. In forex markets, 2 to 3 pips are enough. And in the short setups, our stop loss will be slightly above the blue line. Our risk-reward ratio will be 1.5. So if we risk 1R, we will try to make 1.5. It is okay if you didn't understand anything from these rules. I will give some examples now, and I believe you will understand perfectly after the examples. Before I move on to examples, you might want to stop the video and take a screenshot of our rules, so you can follow me easily. So let's look at our first example. It is a long setup. You can see that ADX crosses above the 25 level, so it is an entry signal for us. Let's check the other rules to be sure. You can see that the price is above the moving averages, so it is a long setup. Lines are not touching each other, so this trade is good to go. We will go long at the close of this candle. Here you can see that ADX passed the 25 level on this candle. It is 25.78. It is the right candle to open a position. It is a small candle, so we will open our position here. Like I told you, I will put the stop loss just below the blue line. And the risk-reward ratio must be 1.5, so I will slide my take-profit target higher. I will try to make 1.5 times more than I risk. As you see, this trade was a winner. Let's check another example. You can see the ADX crossover here, right on this candle. The price is above the moving averages, and lines are not that close to each other. So I will take the trade here. And I will put my stop loss below the jawline. We will arrange the take profit point 1.5 times higher than our stop loss. This trade was also a decent one. I want to show you a short position too, before we finish this strategy. The price is above the lines in this example, so you cannot go long in this situation. ADX crosses above the 25 level, so we know a potential trend might start. We know that price is below the averages, and moving average lines are not close to each other. So, it is a nice time to open a short position. This time, we will put the stop loss slightly over the blue line. Here, perfect. All of the 3 trades I showed you were decent entries. But do not expect to win every trade with this strategy. Trading is a probability game, and no strategy can be successful 100% of the time. You should backtest every strategy at least 100 times before you start to use them. Most of the online trading gurus promise you crazy returns. And I beg you not to believe them. I am not saying that they are all liars and you will never win with their strategies. I am just saying that you have to test everything out before you invest your hard-earned money in their strategies. Now I am going to show you the second strategy you can use with the Williams Alligator indicator. It is an easier strategy, so you will not need a cheat sheet for this one. I will try to explain it with just 2 examples. First, let's look at a long setup. The green line must be at the bottom for the long entry. As you see here, it is at the bottom. We will not wait for the crossover in this strategy, because you know that Williams Alligator is a lagging indicator. If you wait for the green line to cross over the other 2, it might be too late to open a position. Just like you see in this example, if you have waited for a crossover, you would buy at the top. We would not do that. Instead, we would do something different. We will wait for a candle to close above the red line. Just like this one. And as soon as we see the next candle opening above the red line, we will go long. The green line will be our stop loss. Our risk-reward ratio will be 2. And I like this strategy a lot, because if the market goes as you have planned, you can slide your stop loss above, and continue riding the trend without any risk. Let's check for another entry. Here you can see another example. The green line is at the bottom, and this candle here closes above the red line. So it is a long entry signal. However, our stop loss will be so close to our entry in this trade, so it is a riskier trade and we lost it. Just like I told you, No strategy can be profitable all the time. But with nice money management, you can still profit from strategies even if they work half of the time, since our risk-reward ratio is always higher than 1. Before finishing the video, I want to show you a short setup too. In short entries, the green line has to be up top. And we will wait for a candle to close below the red line. We will open a short position, as soon as a new candle opens below the red line. And our stop loss will be just a little bit above the green line. As you see, this trade was a decent one too. I wish all of you guys a profitable trading journey. You might consider subscribing the channel and liking the video if you find this content useful. Thanks for watching, and have a fantastic day everyone.